Okay, folks, welcome back. This is the weekend review, and I'm trying to keep this really short because I'm very indecisive about what I expect to see happen this week. One of the things that I'm looking at, and it will absolutely be a brief video today because I really don't have a lot to say. I'm waiting on how the market opens on the Sunday opening here in a couple hours, and I want to see how we trade today and into Monday. So basically, I want to see how we trade overnight, and I want to see how we close at London close tomorrow. So around 11 o'clock, 12 o'clock East Coast time. That's when I want to see what is in the marketplace. Now, it might not be very much at all. It might not have moved very much, but we just come off of a holiday week, light volume. Nothing really has happened yet. The market's still stagnant. One of the things I'm considering, and this is something I'm just observing. I'm not positioned for anything. I'm not trying to jump on a trade on Monday, even if I think there is something lining up. If it moves, it'll move without me. But I want you to just consider this also for a study. The volume imbalance that we have in here, we traded up into that, and then we had relative equal highs. They spiked through that, not by a lot, but just enough. When we look at the lower time frame, you'll see that. And then we traded softer and back down into the middle of this old buy-side imbalance, sell-side inefficiency. Now, I want you to take a look at the reactions when we get to the lower time frame, how many times we've seen the reactions off this level. If we have weakness on the dollar, okay, say we get a move lower, I've basically drawn an idea of what I teach in terms of a trend line phantom. There's sell-side liquidity resting right below here, and it would also be an opportunity to dig a little bit deeper into this bullish order block. If we accelerate through anytime this week, the mean threshold of this last down close candle here, or the middle, is what that is, okay? The body, split that in half. If it goes below that, then we're probably going to take out this low here. And it'll most likely be a just slow drift towards making an attempt to get below here. We are in the summer doldrums, and it's typically very light volume, and everything, like I've mentioned in the last few discussions, everything is being held in a holding pattern. There's nothing happening right now. We need to see a displacement. Now, displacement, if you're new, means we would need to see a move that's sharp, either higher or lower. I don't have a very strong opinion about which direction, but I'm watching this one with the likelihood of making an attempt to go lower. I would have rather, as I mentioned the last time we talked, I would have rather seen it try to trade up a little bit higher and upset the down move consolidation, but looks like a bear flag, doesn't it? I have a hard time trusting those, as I taught in my core content. But because I'm probably going to be wrong in this environment, my probabilities for being accurate on higher time frame moves and sustained moves, let's say it that way, is not going to be very high in terms of success. I don't think I'm going to be that accurate until we have a major move out of this range. And then everything gets real easy again. And I know it sounds like a broken record, but it's very difficult being in my position to try to tell you what I think is going to happen. I would rather just say, don't do anything, and we're just going to wait for more information. But the problem with that is some of you view purchasing access and listening to my opinion, you want to hear a little bit more than that. So that's why I'm trying to articulate this struggle I'm personally having, and you're going to have this too. So it's not like you aren't going to encounter this on your own in the future. But we need some kind of movement to create an imbalance. Right now, everything is very tight, and it hasn't shown any willingness. So wait until we get this imbalance, higher or lower. But I'm going to look at the likelihood of maybe I was wrong last week. Maybe I'm looking at it wrong, and it may want to come down lower and attack the sell-side liquidity pool and break this supposed trend line. Now, I'm not trying to put too much stock on that, but that's kind of like what I'm watching to see if we get it, because we already had a run above here and it came back down inside of the range. At some point, the market for the dollar is going to move away from this level or this level, and it's either going to move higher away or lower away. And I don't really particularly care which direction, because it gives me an opportunity, because if we go higher, I'm looking at this here. And if we're going lower, I'm looking at this down here. So I know, I'm confident I'll find some opportunity to get positioned long or short in foreign currency based on either one of those objectives. And that's what you have to learn to wait for. And it's not fun, especially if you're new. You want to be doing something. Well, waiting is doing something. Okay, so you have to give yourself permission to do that. Let's drop down to an hourly chart, keep this thing moving along. I don't want to get too bogged down with it. Now, this is the top or the premium end of that old daily BISI, or buy side imbalance, sell side inefficiency. In other words, the higher of the two little red lines. Here's the lower one. Look how price hits that. Boom, boom, and then we're sitting here. There's nothing at all except for the relative equal highs here and the small little fair value gap there. Do they run it up there, hit that, and then reject and go lower? Maybe. Does it just drift lower here? Probably. I don't have a lot of clarity right now, so I'm waiting to see what happens, and I'm going to suggest you do the same thing. Try to refrain from trading tomorrow, okay? I know you're all anxious to get in there and start doing something. Even with your demo account, don't do it. Okay, just observe, see what it does. It might be another quiet day, or we might get some kind of a news event that comes out of nowhere and then gives us some kind of a displacement, higher or lower. But in this case, I don't really have a whole lot to talk about for this time frame here. And obviously, when we drop down to the 15, and nothing's really going to be that different in terms of the scope of directional bias. It doesn't really give us much. I like the equal lows here that they've taken, so they might want to take it up here one more time. Small little fair value gap in here to this last down close candle. That might be something to watch and see if we get a reaction. It might come down to there. If we gap down, come back up, fill it, and drop down into here on this order block, and don't accelerate through this low, because if it does, it's going to take out the relative equal lows there. And then if it does that, and then maybe it might go after that trend line phantom as I outlined on the daily chart. Long story short, this is such a 50-50 environment. In other words, if I had a gun to my head, Michael, pick a trade. I'd have to eat a bullet. I don't know. I really don't know. I don't know if it's going to go higher. I don't know if it's going to go lower right now based on how we have it. And that's not a bad thing. It's just you have to learn to wait to see what we get. So I'm going to wait for Monday's trading and see if it gives us any more insight. And since you guys will get an update tomorrow on a daily upload, if there's something there, I'll talk about it. All right, so let's move on over to Euro real quick. All right, so here's the Euro dollar. This is our daily chart. Similar idea. I'm watching these highs here. If you draw a line across all those, it just looks like they're looking at a downtrending channel. And I kind of said the same thing about the dollar. So you can see how, again, if it agrees on both sides, it's really not high probability conditions. And I can't make it any plainer than that. If I can justify both sides reaching for a higher level or a lower level at any given time, that is the easiest way for you to determine whether you should be engaging in a trade or not. Because if it's that obvious on either side that you can justify something, is it really lining up with institutional order flow? Because institutional order flow is going to be very obvious and one-sided. It's going to clearly be reaching for one direction versus something else. In other words, when we're looking at price, if it's very difficult to justify an opposing view, that's a high odds probability that it's going to be working in your favor if you go in basically the direction of the institutional order flow. And if you're new, I promise you, that sounds like high and lofty speech and mumbo jumbo, but I promise you it's covered in the core content. You just got to get through it. And you also see plenty of examples of it. But right now, you're seeing what it's like to see a technician like myself when we have very, very low odds of seeing what we want to find in price action. So since we don't have those signatures in price, we wait for them. And this is the thing, okay, that got me in trouble with running a signal service back in the 90s. Okay, when I say it got me in trouble, is I would have more losing trades than I should have had because I felt, I guess, obligated because they're paying me. And when I should have, in all reality, I should have said, listen, there is no trade, keep your powder dry. But people were paying me, They weren't paying me a lot, but they're still paying me. And I felt obligated to give them, this is my opinion. Well, if I'm being paid back then to give my opinion, what do you think they're doing with that opinion? They're putting money behind it. And when I was wrong, I would get all kinds of complaints and I would regret doing it. But I never learned that lesson to just be honest and say, I don't see anything right now. So I've learned that lesson as an older man. I just tell you like it is. If there isn't something obvious, then I'm going to say it's very low probability right now. It's not high probability. And you want to be focusing on, especially while you're learning here, identifying what makes a high probability condition. If it's not high probability, you don't want to be in it. Just let it go. Take the day off. Do something else. And like I was talking about yesterday, spend time with your family. It's an off day. Don't do anything. Treat Monday like that. And here's a test for you tomorrow. Since I'm outlining it as such, don't even look at the charts tomorrow. Don't look at Twitter. Don't look at anything. Nothing trading wise, okay? Just leave it alone and see how hard it is. It's very, very difficult. It's like getting a sweet tooth and you got candy in the kitchen. It's just a couple steps to the refrigerator, grabs that little ice cream, okay? Don't. Exercise a little bit of willpower and just wait and see if the market does anything. If it doesn't, then guess what? You'll be rewarded. But if it does, you'll still be rewarded because we'll get some kind of, hopefully, a displacement tomorrow. And then we'll have a little bit of understanding maybe of what it may be reaching for the week. Because right now I don't have it. But if the opposite occurs and we get some kind of a movement higher, and the reason why I kind of outlined that dollar the way I did, because I'm looking at the euro dollar here, and we traded down multiple times in this order block, and I know the most recent one went lower than these relative equal lows, and then we had this snap up, and we rated above this short-term high and came back down inside the middle of the range. If we trade higher, that means I will put more stock on this order block having been recapitalized multiple times, and that could really easily send the euro above this high and then the dollar for its old daily low. That's a potential scenario. And again, I'm not trying to make a hard sell of that, but I'm just looking at maybe I was wrong last week and I might not be or may not have been looking at it correctly. And if this is true, if there's everything that I've outlined here, then Monday should be a nice run that takes above this high here. That's what I would expect to see. Real quick, right out of the gate, trying to get somewhere. And if it does, that means it's probably going to make an attempt to get to this high. And if it does there, it's real close proximity to here. So we would be watching for this week and maybe even the next week if it doesn't get there to that level. Now, again, that's assuming a whole lot. And again, I'm not trying to push it. I'm waiting to see if we get some kind of evidence to support that idea. Otherwise, if we take out this candle's low, which rejected once below these relative equal lows here, in other words, this lower one here, if we go below that, turn your attention to right here. Okay, and you'll see that in the previous recordings as I talked about the euro dollar. So that level would be interesting if we take out this candle's low. Otherwise, I'm going to give it the benefit of the doubt and see if it wants to go higher. If it does, then we'll have something to work with. Dropping down to an hourly. All right, here's those relative equal highs. I did a short in here and targeted the relative equal lows here, swept that consolidation, and boom, there you go. That's the one that I was just mentioning on the daily chart. That's that lower low that took out these relative equal lows. So we ran up, took out this high, and now we're consolidating. So do we run away from this low being swept and just go higher? Watch this fair value gap, because if we come back in, that could act as support and then fuel it higher. I'd rather just run away, not even come back to rebalance that, and take an attempt to run above this high, accelerate up into here, and notice there isn't any fair value gap in there. So watch the rejection block, which is the close on that candle at 113.33.5, and we'll see what we get. Again, if it takes out this low, okay, if it takes out this low here, and let's see what the actual low is. Low comes in at 111.85. So if euro takes out 111.85, it's probably going to go lower for several days, and this would have been the key high that set the stage for that move going lower. They came back, took the stops here, and then rated. Again, I used to feel uncomfortable saying this in the mentorship, but I just want to tell you like it is. And I'm hoping that you're all adults and can accept the truth when it's being given to you. Right now, it's not high probability. And there may be somebody out there that you're listening to that has all kinds of excuses why it's going to go higher or lower. And guess what? They might be right. And it doesn't change the fact that I trust what I've learned from the marketplace, what I'm teaching you, and I don't care what anybody else is doing because I know what low probability is, and this is extremely low probability. And I know what makes it high probability, so we're going to wait for that. 15-minute time frame, you can see there's really not a whole lot there. Again, the only thing I like is that we've taken out this low here and we started to move up, but this is all holiday volume, so that's why I want to wait till Monday. When Monday's trading's done, we will have ironed out at least a day and a half of the volume and the weekend from the previous week, which was very, very low volume. So we'll see what we get. I like the idea of running above these relative equal highs if we can get the support structure behind the dollar going lower. But again, I can't press it enough. Some of you just don't listen. You want to have selective hearing and say, okay, well, he's basically telling us to buy euro. No, I'm not. I'm not doing that. I want to see if it does it. Okay, I want to see how we trade this week on Monday. And then that'll give me, hopefully, a better inclination of what it may want to do on Tuesday and Wednesday. All right, let's take a look at cable. This is the British pound versus the US dollar. This is our daily chart. And as you can see here, we had a drop down, move back into consolidation, drop below the low here. We talked about this move here and this whole thing. And go back and listen to those recordings and you'll see everything I outlined there did in fact deliver. We moved lower since then, traded back down into an order block, and we had a little bit of a reaction. Now we're trading basically at the midway point or equilibrium of this high and this low. And again, I don't want to push it hard, but if we get weakness in the dollar and we get strength in the euro, this also looks like it may want to run a little bit higher. Now we do have a small little portion of this down close candle, in other words, up to this candle's low at 127.6. So it might get some traction and run up into there. I don't think it's going to go there and go lower. I just think that's the next upside objective above relative equal highs is initially really the first one, but then if we get above that, then it's above here and back to this candle's low. If it does, okay, either this week or into the next week, if it trades up into this level, I want to see it blow right on through this low. I don't want to see it touch there and dilly-dally around and go sideways. I want to see it smash right through that candle. And then we can look at potentially trading up into here. And again, it's assuming a whole lot, weakness on the dollar, breaking down towards its old daily low, and euro dollar going higher as well. Then we'd have strength to see it, potentially see that run to here or above here in cable. Let's drop down to an hourly chart. All right, we had the market trade back down into our BISI here, buy side imbalance, sell side inefficiency. It's defined by this candle's high, this candle's low, about midpoint of there. Trades to it here, and we'll see if it wants to make a run, a more aggressive run above that 25, 40, 25, 50 mid figure. So basically, right in here, we'll see if it gains any strength or momentum on the upside. That's actually a good thing. If we do trade up there, we do not want to see it trade back below this low. Then if we move basically 125.50 or higher, this low should stay in place because we had the market come back down. It doesn't want to close that BISI. That's what you want. You want to see that act as a breakaway gap, okay, or potentially even a measuring gap, because we do have a gap down here that didn't close in, right? So here's our breakaway gap. This is our potential measuring gap. So this move here, add to the low here, if it stays intact and we trade above 125.50, again, that's the assumption. That's what I'm looking for. That's what I'm anticipating, that type of idea. Then this low should stay intact, and then this price leg from here to here measured and added from this low up and projected. In other words, what I'm saying is this. So I know some of you are like, what are you talking about, Michael? Can you just show me? All right, so if we looked at this low to this high, and make a solid line out of that. Okay, so that's the range. If everything I just said falls in line, we can project it from this low, and this is just a measured move idea. It's not mine. It's classic price study. Low to high. If we run to 25.50 and stay there, we should not go back below this low. This would be a measuring gap, breakaway gap, and this would send us around to that 127 big figure. Okay, so that's a little bit of forecasting wizardry. It may not even work because we're not in high probability conditions. But if everything I just outlined occurs, that would change that narrative. All right, so that's the business on the hourly chart. Let's go into a 15-minute time frame. And again, nothing terribly exciting here. Just holiday volume and nothing really to make a case for, except for what I've outlined on the hourly and daily. All right. I'm going to look at the E-mini S&P now, and we'll wrap this video up. All right, so here's the 15-minute time frame on the E-mini S&P. This is the September contract for 2020. All right, so we have a small little buy side and balance, sell side inefficiency there. Relative equal lows. So that's the sell side liquidity pool and the BISI. Here we have a sell side imbalance, buy side inefficiency, or SIBI. And the buy side liquidity pool rests above that. So there's a convergence of the SIBI, buy side liquidity pool, both meeting at this area here. The market trades up into that and almost consequent encouragement there, and then leaves it. We have a volume imbalance. See that? The tail and the wick, no body. We trade up into it here. Doesn't quite close it, and then boop, we hit it, and then we move lower. Okay, what is it remembering? It's remembering that it needs to come back up in here and one more time above an old liquidity pool. So it trades to that point and then moves lower. What is this candle here? The high comes in at 31.24 and 3/4, and the high on this candle is 131.24 and 3/4 exactly. So this is institutional order flow entry drill. Hits it, that's your short, and then reach for relative equal lows and the buy side imbalance, sell side inefficiency. I mentioned one of these days, I think it was the 2nd of July. If you go on Twitter, I think, don't hold me to that exact date, but I'm almost certain it was the 2nd of July. But I said note 3160. Okay, 3160. If we get a reaction and start to trade higher, which I think we could, if we go out to an hourly chart, you can see we came back down, hit this, so we'll want to see a continuation on the upside. Let me get some of this lipstick off here. Starting to get on my nerves, man. All right, so we'll see if it wants to gain some momentum on the upside, but I like 3160 because it's below consequent encroachment of this level and this level, and we'll see that on the daily chart in a moment. But I believe that we're going to see all-time highs again on S&P. I just think that's where we're going. NASDAQ's already done it. I think the S&P is being reluctant in trying to get there, but I think it will get there. If we go into the daily chart, all right, so we have this candle's low, this candle's high, which is the residual of the range that was here from this candle's high and this candle's low. In other words, this is a SIBI, sell side imbalance, buy side inefficiency. The market will likely try to come back up and close that in. We got this far here, so that leaves a remaining balance of this low to this high open. And you can see we basically just did the same thing here with this high. So 31.56 and a half. I think it went 1/4 of a point more than it did here. So 31.56 and a quarter, and again 31.56 and a half. So 1/4 a point above this. I think one more time getting up in here will take us all the way in, completely close us in, and then attack the buy side liquidity pool resting above these relative equal highs. Do we do it right away? I would rather see it do that. Now, why would I say that? Because there really isn't anything to come back and rebalance down here. I mean, we already came down with the low here, which is already in here. So there's nothing in this that needs to be rebalanced. So everything should be expansion on the upside for E-mini S&P. And again, just to remind you, what I chose 3160. It's a round number, 3160. It is 10 points or 10 handles above the 3150 mid figure, and it's just below consequent encroachment. So I'm not saying that's the end of the move and it's going to stop. I just think that that's a nice objective to reach for. That's why I was prompting everybody to look at. Did you gather all this from me giving you 3160 in the tweet? Probably not, but that's the reason why you're here, right? You want to learn. So let's take all this business off. You can see it's very clean like that. And we want to see it expand and go right up into this low here. But 3160 is a nice doable level. And then we should start to see pretty consistent up close candles should we get above this candle's low. And where there's small candles, small ranges now, relatively speaking, that they're really a lot of range. But in terms of what's been going on, we'll probably see candles like this on the upside eventually for S&P, because it's going to try to catch up and move in sympathy with what the NASDAQ has done. And that, my dear friends, is going to be it for this one. I will talk to you tomorrow evening after we do our Monday's review.